Welcome back, everyone. Today's video is going to be about some of the odd things that happened in the past in the name of security of supply or the future of production in uranium. Looking back at the pricing of the equities in the last uranium bull market, I noticed something weird. Many of the equities didn't really seem super concerned with net asset value, NAV. Many of them were trading at a premium to NAV. Now, this seemed weird. Maybe not in at the end 2007 when things were going crazy, but really all through the bull market, many of the uranium equities were trading at a premium to NAV. So, was there a reason for this, or was it just that the equities were consistently overpriced? Now, as crazy as the pricing may seem looking back, here's the crazier part. There was consolidation. People were buying uranium and paying the crazy prices. Now, why is that? Why would anyone, and I'll get more on this later, Extract Resources was bought in 2012. This was after Fukushima. It was bought for $2.4 billion. Now, this is a massive deposit, bought for $2.4 billion, then developed. But the economics at the time did not justify $2.4 billion for making that purchase. Not even close. So why did it happen? Why did things like this happen? It seems like because it happened because for some owners of projects, the ownership of the uranium is more relevant than the net asset value, the amount that you would make mining it. Why? And another point, if one were going to argue that those prices were just paid because sovereign powers. Well, there's another problem with some of the uh, prices paid. Rio Tinto and Cameco, they care about profits, probably, at least. You look, they bought Rough Rider, Millennium for 10, 8, 10, $12 a pound. I'm not saying the valuation they thought of was per pound, but that's what they ended up paying. And these projects will still need a lot of money to go into production. And then they also have costs. Why is uranium so expensive? Uranium 1, also big consolidator of projects in the last uranium bull market. If everything was so overpriced, why were all the big players buying uranium? Let me take a guess as to why. Uranium projects take forever. Been through that and we'll go through that further. They take a long time. And then rewind a few years and look forward, and there was concerns about future supply. Where was it going to come from? What projects would make up parts of it? People wanted to know, wanted assurances of them getting their uranium. And even if you look, Cameco, for example, if they're going to sign long-term contracts, if they're going to promise uranium for the future, well, they need to secure their business. And what's happened since the time of people seemingly, looking back, if you look at the prices paid, losing their mind buying uranium? Have we found tons in the interim? Well, we found some. Fission found J-Zone 2010, PLS 2012, NextGen found Arrow 2014. 3 deposits, 2 of which quite big. But in the meantime, how much uranium has been produced from Cigar Lake, MacArthur River? If the price is going to work at low levels forever, there needs to be a whole lot more spending to replenish what gets produced. And at these prices, as I said before, how much is being spent every year? Not much when you compare to what needs to be spent to find enough uranium. Thanks for watching, everyone. If you've made it to this point, I applaud you. If you enjoyed, you might also enjoy the other episodes in this series, and they will be all out eventually, and probably some have been released already. As always, nothing I say is investment advice. This is all just what I'm seeing, how I'm thinking about the sector, and what I view as relevant. So with that, I will leave you there and have a great day.